Welcome back. Well, we've got a major review of the RBA. It's due to be handed to the government tomorrow. We'll perhaps get a response in the ensuing days, but it will be fascinating reading, given, of course, the actions of the RBA has been somewhat criticised, perhaps missing inflation on the way up. Is it best fit for purpose going forward? And Bligh from Australian Bankers Association joins me now. Interesting review. What's your view on the bank? Do you think its performance could be changed, its parameters, the makeup, the experience of the board? What's your view?
Well, I think every bank and I think a lot of people in Australia will be very interested in the report coming down tomorrow. For all the obvious reasons, most people think about the RBA about interest rates, which of course is an important lever in the economy. But the RBA plays many other roles as well. They also they oversee our currency and they also oversee our payment system. And those two things are not going to look the same in 5 or 10 years' time as they do now. So I think it's a very opportune time to consider the role of the bank and its ability to be future fit, if you like.
Right.
So this is the first review in 40 years. I would expect every organisation from time to time can benefit from an external review and think about what does it need going forward.
Even and sort of grappling with crypto.
No, that's right. So, what is money is going to be a question in every country in the next 5 to 10 years. The RBA is already looking at a central bank digital currency, as are other central banks in the world. So I do think, obviously, interest rates will always be something that matters pretty much to every Australian and is a big and important lever in the economy. But it's not the only role of the RBA, and I think this report's going to be very comprehensive.
We'll see. I'm sure we'll talk about it after that. You mentioned interest rates. Do we feel like we're just about the end of the cycle increases here? Are you willing to call that?
Well, I think at the moment the economists are literally 50-50 on it, Tom. So, I don't think I'll be, I'm not going to jump into that argument.
But get a headline.
What the governor himself has said is, and this is self-evident, that they're getting closer to the end of the cycle, whether that's next week or next month. Every time it lifts, you're getting one closer to when the pause starts or the monetary policy starts to pull back.
Yeah.
I do think that, the inflation figures yesterday, the employment figures, the retail spending figures, these are all things that they'll take into account. They've indicated that that a pause is somewhere on their agenda, whether it's next week or not is, as I said, 50-50 looking at the economists. But it's important, I think, to remember that there is a 2 to 3 month, but on average a 3-month lag between when the governor announces a rise and when it actually hits people's hip pocket and appears on their mortgage.
Decision, it happens, and then... Yeah.
And then there's people are given 32 days notice in writing. So by the time all that happens, so most people are only paying the November increase. They've still got the December, the February and the March increase.